right here. Let's see. Let me see if this is working. All right here. Let's see. Okay, so today was actually a pretty good day. Started off with a gap down, and that trade actually hit target. Went from 750 that should have been stopped but didn't, but because of a gap, hit profit at 4,000 even. I got picked up on a short at the 4,003 no 4,075, which is right around here. I got picked up right here on this candle, and it almost stopped me out. I wasn't even looking at this though, because I didn't even have the luxury of feeling the fear of it potentially getting stopped out. And eventually, once the afternoon session kicked in, it hit profit, which was in this particular case. I'm glad that I only set it to the 250. I played the 6-3 blah, blah, 475 down to the 825, which is 250 right there. So every big quarter of a 250 point move for me is um, $100 on this account. So it's a $200 win, 2 wins in a row for today. No losses, and that's a good day. It's about time. I had a good day, and one good day can like this with 2 wins in a row can make up for like lots and lots of losses in a row, which is what I had, and that's um, why I trade this way. I've gotten over the fact that 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 winning often is the path to success. Now this trade is a little bit more annoying. I got picked up on the S&P at the 125 here, and it did well, and it went all the way to halfway to target, past halfway to target, which is usually when I would, move my stop to break even. I'm not sure if that's really the right way to play the S&P 500 because these are much bigger and longer moves. So in order to clear a 100 point, well, in this case, a 75 point move, it takes. Sometimes it can do it in one day, but a lot of times it takes more than one day. Let's see. So this, it's like from the 4,000 to the 4,075. I guess took a span of 2 days. It went from Tuesday morning to uh, Wednesday is when it finally hit target, and I'm not sure. These are bigger moves, and I'm still getting used to it, so I'm not gonna mess with anything until I get a better feel for it. Locking in profits in the Dow makes sense because it's a shorter term day trade. Usually, I mean, I cleared 2 quarters, so I cleared 500 points worth of movement today in one day. So, you know, 250 is like nothing. It's just a matter of catching it from the beginning to the end, right? That's the game on the Dow. On the S&P, it's slightly different because you're capturing to play the minor levels anyway on the which is what I'm doing on the S&P. You don't have to. You could do like like small quarters, right? Like 25 points. In which case, in my opinion, something like that is even more dangerous than and more risky than the Dow. So it doesn't make it like there would be no point in me switching over to the S&P if I was just going to trade that way. So I'm purposely trading the minor levels, which is a larger time frame trade. It's more of a swing trade almost every single time. There are exceptions, but it's almost always going to be more than 1 day worth of holding. And so today, it's not any different. I am not really surprised it didn't go all the way up to my profit, because there was this bearish divergence and a bearish engulfing, all this traffic in front of it. I guess, hindsight being 2020, you could make the argument that this was I could easily have locked in a 2-to-1 here. Oh no, a 1-to-1. Sorry, 1-to-1 here, and then maybe even a 2-to-1 up here at the 175. It would have been okay. So locking in a 2-to-1, maybe. I don't know what the odds are for this yet, and what my win rate is going to be for this yet. If my win percentage is high enough, then taking 2-to-1s wouldn't be bad. But I would need my win percentage to be better than. I would want it to be like 40 to 50% if I'm gonna start taking 2-to-1s and settling for 2-to-1s as a first profit. I'm not sure about that yet. So right now I'm just gonna just set it and forget it and not touch it and see how that pans out, because that's the cleanest form of data. Anything where I mess with it brings in human emotional variables, and I'm not gonna be as objective. So moving on to the weekly summary. This week was from January 30th to February 3rd. So January 30 and February 3rd, I can already tell this is, well, maybe. It feels like I took fewer trades, but we'll find out. Let's see. Well, I'll just copy this right here. Paste special values only. And let's see. If I only take last week was 23 to 27. Oh, this is gonna take forever. Okay, I'm just gonna delete it. Anything above 23. Delete rows. Nope. Oh, yes. Okay. So I took 23 to 27. This was 17 trades last week. This week I took 12. So definitely fewer. It felt like I took about half, but it's not quite half. It's like last week I took 50% more, pretty much. So it's about 2/3. 2/3. Okay, so let's just go through these. These were 1, 2, 3, 4 wins, and 1, 2, 3, 4, 5, 6, 7 losses. 1 break even. Okay, so let me see here. That is I'm not looking for the sum. Although, yeah, let's do the sum. I didn't realize that. Okay, it's 12 trades total. My sum is 195. So I netted 2. Minimum was okay. No, these are not going to help. 1 out of 12, I won 1, 2, 3, 4. 4 out of 12 is 33%. That is right on the money. That's around where the edge should be. Winning 1/3 of your trades, losing 2/3 of your trades, but locking in 3 to 1 every time is a profitable strategy. Break even would be losing 25% of the time, but really technically, it's actually, you can actually argue that it's 4 wins out of 11 total trades because there's a break even there, right? So I am quite happy with this. This is textbook. Even though the what I stand by what I said before with the market being really choppy as hell, like the Dow just being really stupidly choppy, whereas the other things, that Nasdaq and the S&P 500 are following nice trends. If I was trading that before, I think I would have been much happier. But I chose the Dow, which is kind of been doing its own thing. It's not that surprising considering how volatile of a economic status that we're in, and this is only 30 stocks and I believe it's weighted as well, and so like it's very slippery. Whereas the Nasdaq and the S&P 500 are a little bit more stable. The Nasdaq moves a lot, but it's been beaten down so much by the previous year, by all the tech stocks just plummeting, that there's a stronger bias for it to recover and go up. So a little bit of a fundamental play coming into the picture here, and very happy with the. It makes me kind of question whether I should whether I should move on when I had a very standard kind of week. Um, Trading just the Dow. The S&P trade didn't close, so it didn't get locked into the this week's trades. The trade will be entered on close, and this is an open position over the weekend, so it didn't count for the week technically. So I'm still gonna stick to looking at both, but I'm gonna be more mindful of the tendency to overtrade when trading two and maybe even three, because I'm looking at Nasdaq too. But um, I might transition into Nasdaq S&P 500, Nasdaq for the major quarters, and then S&P 500 for the minor levels, and essentially replace the US 30 or the Dow with the Nasdaq, maybe. But either way, the account is looking better now, and we'll resume next week.